Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April 3rd, Wednesday. Today, it's a day of surprises due to the economic data. We got first the ADP employment change for March. We caused a little bit of trouble to the market because we got way higher private payrolls, 184,000, and this is inflationary pressure. But that was at 8:15 a.m. and everyone was watching at 10 a.m. the ISM services data. We first got the S&P Global Composite and Services, and remember that services is what the Fed is watching as sticky inflation. And the first sign of good news was at 9:45, the S&P Global Services PMI final for March came lower than before, from 52.3 to 51.7. Then at 10, it released the final data of the day, and oh boy, it was really good news. ISM services came with new orders lower, 54 instead of 56. Prices on the ISM services, 53 instead of 58. And business activity also remaining more or less in line. The final PMI went lower from 52.6 to 51.4. So this is a big win for the market, and that is why we are going to see how it reacted. It was pretty damn good and spiky. So let's first start with the 30-minute chart, because yesterday we got the big dump during the overnight, and then during the day it's just a choppy day and a final push to really end the day in this zone of basically inverse fair value gap with the golden pocket and 50% retracement. This is a regular pullback. This kind of pullback also provides the opportunity for shorts to continue adding. And then we got a little bit of choppiness and the release of the data. Look at this candle on the release. Let's go back to the 1-minute chart, because I would like to share with you my trade during the overnight and then what happened at 10 with the data. So this is the overnight, all this chop, and I was waiting for either break the buy side liquidity or make a new low with a big retracement in the area of value. So basically we got that. This liquidity was taken, we grabbed lower, and then we retrace again in the same zone. So as you can see, I tracked the inverse, we went through the inverse, we left this fair value gap, and on the pullback I bought the first candle to make a new high on the 1 minute, and it spiked on volume, making me more confidence with this pivot right here. So my target, the risk was set at 16 points, so $320 with only one contract. And the target was basically, look at all these stacked highs. At this level, I was just watching and trailing the stop at the pivot, and finally we got the final liquidity hand with this rejection and then the dump. It was right in time, because at the time the ADP employment was released and then we dump due to the payroll being higher than expected. So pretty nice, pretty planned, good trade all in all, and 46 points, 850 something dollars. Then we dumped, and I was waiting for obviously what everyone was waiting, the ISM services data. And this is the candle at 10. Look at this big push with big volume, more than in the open, because everyone was waiting. Is this good data? Yes, it is. But as you can see right now, since 12, Powell is speaking. So we crashed a lot of price action and we started curling. But this volatility right here is due to Powell speaking. And he's saying basically, let me just grab some notes. that there are risks of cutting rates too soon. The supply side recovery is stimulating new demand and supply, and he thinks that monetary policy is working. That's all good, right? Pat Bostic this morning said that he's still forecasting only one rate cut this year. And Powell is now basically saying that he sees risk on cutting too much. So maybe the three rate cuts that everyone is pricing in the market might not happen. We have yesterday a lot of Feds saying that maybe there will be no rate cuts because they are not seeing confidence inflation progressing lower. They have also today Bostic saying one rate cut, and now Jerome Powell saying that he sees risk on cutting rates too soon. So all in all, we have to watch the interest rate futures and also the yields. Let me just talk about that because even though the price action on the Nasdaq looks pretty damn bullish, and at least for today, we are still seeing on higher time frames, we are still seeing lower highs every damn time. The only thing that today happened is that we did a higher low, but we are not reversing all the move that yesterday was dump and dump and dump. Yesterday, market internals, let me just share that with you real quick. Yesterday, look at these market internals. On the ES, we got all this volume coming down. And look at the advanced decliners. There were a lot of stocks in the S&P not being able to just put a candle up, green candle up. Big selling pressure. And on the Nasdaq, look at this. Look at these outflows. There's a rotation going into commodities, gold, dollar, crude oil. There's a lot of rotation there. And when you see these kind of outflows and also the advanced decliners just spiking lower and not being able to cross the 2000, these are really bad internals, really bearish. So even though we got excited, the market got excited with the ISM services being lower, I think for us, the line in the sand is this line up here. There's a lot of shorts up here which are pretty well positioned. And even though we spiked up, Jerome Powell right now is talking. And oh boy, the volatility is insane. So basically, we have to look for other assets, other parts of the market to really see what is happening. What is the dollar doing? The dollar is retracing lower after a big push yesterday. So we tried to go higher and now it's minus 0.46. This is good for the stock market. But the yields, yesterday we went up on the 2-year yield. On the 10-year yield, we are spiking higher. We spiked today to 4.43 on the 10-year. That's insane. Treasuries are breaking down. We were doing lower highs, lower highs, lower highs, and the final line we are now breaking down. Be careful because treasuries are basically saying that bonds market is freaking out, and high yield corporate bonds are also in this range, looking to the upside or to the downside. So bonds market has not a clear picture of what the Fed is going to do. No one knows, but usually the bonds market is pretty damn right because they are managing risk on big investment portfolios and hedge funds, and they know about how the path is going to look like in the interest rates. So small caps is the only thing pushing higher today. I think after the ISM services PMI at 10, look at this push. Obviously, small caps are going to go higher. Those are the stocks, the companies that need that interest rates are going to be lower. Financials are pretty damn mixed, a little bit of green, a little bit of red, but overall, energy is the only thing that for me, it's not doing what it needs to do. Look at the XLE energy sector. big breakout. Look at crude oil. Unbelievable. Unbelievable. 86 plus dollars a barrel. Gold is also spiking. We have now reached the liquidity at, it's not all-time highs, but I think there's pretty damn 2,500 and 300. So as you can see, commodities are pushing higher. That means that higher prices on commodities will push inflation higher. Being gold, being copper, being crude oil, being energy overall. Yields are also pushing higher. Dollar, it's the only thing that maybe is pushing a little bit of stocks, but I don't think we are out of the woods yet on inflation for the equities. So Nasdaq and the S&Ps are still in a very volatile environment. There's a lot of position being made for this quarter. And in my opinion, until we cross this 30-minute chart, I wouldn't be confident about taking big intraday long trend days. So today, if you scalp the news and you jump on momentum, that's pretty damn good. That's okay. But be careful, because I think we are still under shorts control, because only one data on the ISM services PMI is not going to change everything. There's a lot of this trend that already took a lot of people and liquidate a lot of people in the movement yesterday. So this week is going to be quite important. What else we need to see in the week? Well, during the week, I think we need to see, as you can see, tomorrow is going to be a lot more Feds. Look at this. And jobless claims. Labor market needs to cool down a bit, and all these Feds are going to provide a lot of volatility. So be careful tomorrow. And finally, on Friday, non-farm payrolls, unemployment, earnings. This is going to be huge. Also, one Fed, two Feds, three Feds. So be careful, because I think this week it started pretty bad in terms of the Nasdaq. On Monday, we just sold off. Now we are going higher on one data ISM services PMI, going lower than expected. And it's only one data point. And the week, it still has 2 more days to really see what is happening. We got our trades. I think we pretty much nailed some of the overnight moves, at least for me. But this move, it's quite good, but I don't think this is enough to really see, okay, the Nasdaq is going to make all-time highs again. Be really careful with that narrative, because I think shorts are still under control. They are still holding pretty key levels. So until then, I would be more cautious. I'm a bull long term, but I don't want price action just doing these kind of things. And I prefer to just be more confident and be more conservative and wait for things to really settle and start seeing that perhaps we are really, really looking forward to this zone up here. Until now, I will just wait. I got my money today, and I will be more than glad of waiting today and the rest of the week to see how the market reacts to today's news and how we close. The closes are key. And yesterday's close was pretty bad. Pretty bad. So we are still holding this daily fair value gap, but I think all these weeks there's a lot of money being shorted in the equities. So be careful. Just that. Be really careful. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecast, market updates, and market recaps. I appreciate your time as always. I hope you are having a nice day after yesterday's sell-off. Today gave us a lot of opportunities for the long buyers to really make some cash and start seeing some green again after yesterday's big sell-off. And remember that discipline, patience, risk management, those are really your key for success, even more in this kind of market. Volatility is off the roof. Be really careful this week. Be patient. Money will come, opportunities will come. Just be smart and wait for key signals and key levels to be reached. Don't lose to FOMO. Don't lose to hype. Just think with your brain. Be smart and be patient. Stay safe, everyone, and see you tomorrow.